Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance.
Hello and welcome to episode 22 of the Wall Street Lab podcast. I'm Luke.
And I'm Andy.
This week we have something really cool for you guys, as we had a conversation with Sven Korschinowski, who is a partner for payments and banking in Kpmg. Sven has been dealing with a variety of topics within his space, including blockchain consulting, corporates consulting, regulation, startups, fintech, anything that touches the space.
Yeah, and we talk a lot about those topics. Future of payments, banking, of course, blockchain can't be missing in that. We talk about ICOs, regulation in Europe at the moment, and of course, how to get into consulting and how to become a partner at Kpmg. So yeah, let us know, write us an email if you make it at Kpmg as a partner, and we'll thank Sven for that later.
Sounds good. And if you enjoy this podcast, please let us know. Leave us a 5-star review on iTunes. We really appreciate this. It really helps us to grow the show and reach audiences such as yourselves. And now, without further ado, please enjoy our interview with Sven Korschinowski.
Hi Sven, great to have you here.
My pleasure.
We are in Frankfurt today in the wonderful tech quartier, really startup-like style, cool space, a piano even outside. Can you tell us a bit about the tech quartier and what you are doing here?
Yeah, that's great. Indeed, so we're quite happy to be here in the tech quartier. You know, since 1 year we have one big fintech center and fintech hub in Frankfurt. And the aim is to build type of a magnet for all the fintech activities in Frankfurt and in the region. And for sure, it's not only the TechNet here. We have many in Frankfurt, many activities. And the aim of TechQuartier and Kpmg is to play a part in the ecosystem for the banks and the fintechs and bring the providers together in order to make it as a center for innovation in financial industries.
That sounds amazing. That sounds just like what Frankfurt needs as a city, right?
Yeah, indeed. You know, when you look on other geographies or cities such as Berlin, for example, there's other type of creation and innovation and startup life. And in Frankfurt before, it was not that big. And that's one reason why we did that as an ecosystem. And I think that's quite good for the banks and all the other companies in the financial sector.
It's a really cool idea. You said Kpmg is involved. Can you tell us a bit more about how you got to Kpmg, how you got to today, what did you do before, and what is Kpmg's role in this fintech ecosystem?
Yeah, I'm happy to do so. Maybe starting with the last. So the role of Kpmg in the ecosystem is to bring innovation in the banks, for example, or in the insurance companies or in the investments company, in either using startup ideas, using technologies in order to help to shape the digital transformation. That's what we're doing for the banks. On the other hand, we're trying to help the startups, the fintechs, in order to build their systems and to build their business. You know, when you start, you have maybe some legal questions. How should the legal entity look like? Or you're doing business across the borders, and then you have tax issues, etc., etc. And our startup people help those founders to give answer to the questions. And as we do have not only the tech quartier, we are playing roles in many fintech centers across the globe. That's what we say, bridging fintech ideas together and bringing that into tech quartier, into the German market.
Doing like the incumbent mentoring for the new players in the market so they don't get rolled over by any like, kind of small things that potentially could ruin the company, but is not really necessary. Does it sound about right?
Yeah, that's right. In a way, that's the case. However, on the other hand, when you look on the German market, the other banks, they're great people and they're doing a lot. And what our role is, for example, is to bring the global insights into that market and to put all the things together to connect the dots.
Some best practice ideas.
Cool. Awesome. Yeah. And you ask what I did before for Kpmg. So I've been working many years as a banker at Deutsche Bank, so working for the incumbents. So did some great work many years, especially for the corporate clients, transaction banking. And then I decided after some years to do consulting, to go to Kpmg and to consult our clients. So first I've been with corporates, consulting multinationals, those which run a type of the bank inside of corporate, which is called in-house bank. The bank is doing that. Mm-hmm. And then I moved to banks and consult the banks more and more and integrating the fintech stuff.
Okay, you're doing a lot in the fintech space. What is your role at Kpmg?
So I'm partner for payment fintech innovation. So doing basically two things. On the one hand, focusing on payments consulting, from strategy consulting into the process and IT implementation. So from end to end. And that's my consulting business, what I'm doing. Mm-hmm. On the second side, what I'm doing also, and that's part of my role here in the tech quartier, but also in the German market and other geographies, to bring that type of information and innovation into Kpmg, mm-hmm. and to spread it to my colleagues, which are just sitting in another business, and then on the other side to the banks. So, in a way, two roles.
Yeah, building the bridge,
the ecosystem inside Kpmg plus outside on the market.
What made you go into fintech? What was your driver? Like, why did you want to be from the incumbent to consulting to fintech?
Well, in a way, it's a long story and an old story. When you not say fintech, but techfin at Deutsche, I did techfin.
Okay.
In 1999, 2000, we did a lot of stuff in electronic banking, e-banking. It mm-hmm. was really state of the art. And in 2000 in France, I've been in France for some while for Deutsche. So we implemented a cryptographic-based solution for corporate clients to send information from A to B. It's basically 18 years ago. At that time, maybe it was quite early in the market, but that's the first time when I talked about techfin, not fintech, but techfin. And then later, when we talk about Kpmg consulting, I think it started with payments. But at that time, in 2011, 12, nobody talked about fintech. It was payment solutions. And now that's part of fintech. So in 13, 14, I started to see more and more other businesses in fintech. And so we integrated that into our offering.
A bit like fintech before it was cool.
Yeah, right. So we dealt, for example, with 360T. Everybody's talking about that. And 2004, 5, 6 already when it started, when it became big.
Okay.
But it's what was not called fintech at that time.
Yeah. Obvious question. Where do you see the trends going in the finance industry and in the fintech space for that matter?
Well, let me say, I think fintech for the German banks was, in a way, a lucky wake-up call. Because it made the banks aware that they have to change and that technology will provide the change. And if the bank wants to provide any service longer to their clients, they have to change too. So I think that was a positive trend for the banks in order to see that. And the banks started to change. Is that quick enough? We will see. Sometimes maybe not. And we know the banks have a lot of other stuff to do. It's IT, it's legacy, it's regulation. However, that's not an excuse for the banks not to do nothing. But they do something. I hope they will have time to do so. But I think some of the banks will not keep the space on that.
Okay.
On the other hand, when you look on the fintechs, they provided some services. And starting maybe with the B2C space, with young and cool and fresh solutions. And now the fintech space is getting more and more mature, and we will see in the next time maybe other solutions than we've done 2 or 3 or 4 years ago.
What do you see the main problems that big banks face? You mentioned legacy system, you mentioned regulatory things, like we can talk about PSD2, the Payment Service Directive later. Mm-hmm. We can talk about MiFID, and there's so many things to do. This spread that most banks have to tackle now between innovating and but getting their old stuff to work? What do you see the most important thing to focus on right now?
Well, I think it's manifold, because in the past the banks had only the competition between the banks and less with third parties. And once you've been in a bank, you will never change, at least for private clients. For corporates, a little bit different. And now they do have. And they have to manage all the capacity and the capital in order to fulfill regulatory compliance and to update their systems and the IT legacy. I think that's an important point. However, what I'd like to recommend is that while doing this, they should always looking on the client. They should always looking on innovation and to provide the best services for the clients, not doing the one without doing the other. And I think in a way that's possible. That's a different task than the fintechs have, because they can decide on one client, one business model. However, I think there's an advantage for the banks, because they have the existing client base. Mm-hmm. At least at that moment, is an advantage. They have the existing clients. What we see is that many clients are not willing to change their bank, so they're accepting the things the banks are proposing or the prices that they're proposing, and maybe they complain, but they will not change the bank, at least not in masses.
Okay, so what do you see then the biggest problem or the biggest challenge for the fintechs, for the startups? What do they have to overcome to really be successful?
So first of all, to address really a need for the client, to solve a problem, as we always say. And the second one is to scale, to have the client and the client base. So because we've seen in all the segments of fintech, be it payment, be it robo-advice, credit lending, etc., you see many fintechs in every segment. And you need the client at one time, the client base, in order to scale and to make business and to be profitable.
Mm-hmm. What do you think, how can startups achieve that traction? Do they need to work with incumbents? Do they need to push millions of euros into marketing? Or what would you suggest to a young startup, to a young founder that was like revolutionize the payment industry? What should they do? What should they start with?
Well, it depends if it's really a revolution. When it's a revolution and you're building a new services, then and which addresses the client need, then for sure you will have to take the money and do the marketing stuff in order to make you known in the market. If it's really a revolution or really a new thing. And we see some examples for that. So we have N26 or Revolut, the both players, and they're doing a lot in that space, putting the money into the market. However, what you often see is that you're solving a part of the process, be it in the channel, be it in the client acquisition, or somewhere in the process for retail or corporate clients. Then you're part of the play, and then you have a good solution, which the banks will buy or third parties will buy. Mm-hmm. I think that's different type of the business model. And the third way could be to say, okay, let's partner with a strong bank, and that might be good for both sides. And just let me say the example of Scalable Capital and ING DiBa, which apparently what we see in the market works good for both sides. So see the numbers of Scalable after they went together with ING. So it seems to be quite good.
Yeah. You mentioned N26 and Scalable. Do you have any other very promising, very cool, either startups or models in the mind that you say like, oh, they stand out, they have done really cool stuff, are really successful?
So what do we see in the market? And everybody's talking about the names. I just started with those guys. Let me add Raisin and many more. I think success will be measured over time. So let's have a look in a 3 to 5 to 7 years period, and then we can see if it's success or not. Maybe those which are started quite early have the advantage to have a good solution. So, for example, N26 built the cool smartphone bank, and they had been the first. They started with Papaya and then number 26 and moved to N26. So on the market, everybody which comes later is much more difficult in order to repeat a success.
Yeah.
However, what I think, and you're asking for the model, what I think is when you as a startup can provide a model which cuts a part of the intermediary, be it the bank or somebody else, then you have an opportunity, because then you're cutting costs, you're cutting time, you're cutting something in the process. Might be quite difficult to find that in the B2C space. Or I think more interesting is to find it in the B2B space.
But
so
B2C is sexier, right?
It's in a way easier, and everybody understands it because everybody is a private client in a way. Every day we're using those type of services. And the B2B space is a little bit more difficult.
Mm. Yeah, of course.
You need more player to put together.
Yeah. You said earlier that you try to bridge the gap between international startups and Germany. How does Germany compare internationally to the UK, to Silicon Valley?
Let's say in the last years, I think the German market, the German fintech market, made a progress in comparison to other markets, be it the UK or some other European markets. Silicon Valley, there's just a type of business models, what we see often in the B2C space, and quite relevant for the US market, and maybe less for European. But when I take, for example, the AXIC Fintech conference earlier this year, I've talked with some people and you said, okay, well organized, great conference, great people from Jolly Roger, which are organizing that. However, when you look on the fintech, that was not that much innovation from 1 year to this year. So it's a little bit less. And what I see is that we have other markets which are quite fast to produce every year new stuff.
Like which markets?
Let me say, for example, Israel, Tel Aviv, or even Jerusalem now. Let me say Singapore is quite strong. China starting to kicking off. So there's a lot of money in those markets, a lot of ideas, and I think they're quite fast and often faster than we are in Germany. However, then we come to success and measuring success. Then we will see if they are really better or good.
Yeah, I've lately read that in China, basically beggars and every street food stall has now a QR code on their carriage, and they get paid with WeChat Pay, and everybody accepts WeChat Pay. Now you get tips with WeChat Pay. Or the biggest investment fund in the world is now from China. Is it Alipay or? I think so, right? Yeah,
so you're right. When you see those players and you ask for the payment question, the mobile payment from Alibaba or Alipay and Tencent, WeChat Pay, they accounted for 3 trillion transactions in 1 quarter, the last quarter.
Wow.
That's incredible numbers.
Yeah.
And that means they have the technology stack, so the solution which is capable to provide massive transactions in a second, in an hour, in a day. It's incredible.
Is it only the solution, or is it also the easy market? Because China is so big. You have so many people having one regulatory system, one legal system. Does that help a lot compared to Europe?
Yeah, well, I think that's the reason. First, China is a big market itself. So 1 billion plus people living there. So that's a quite huge market. Regulation in China is different. So one of my colleagues from Beijing and other cities saying to me is the regulator and the government lets the music play. So you can start your business. And when you're successful, then the regulation will come. So it's not the other way around, how we see it sometimes in Europe.
Okay.
And the system, the political system, the financial system is different. And if you talk about Europe, then we have 33 countries, different regulation. So we're starting to uniform regulation, and you cited PSD2, that's one thing. But when you do business across Europe, then you have often very different regulations. It's on the AML stuff, it's on the crowdfunding, crowd lending stuff. So it's not one European area with 500 million people. It's split up in many different countries.
But then interesting enough, you said Singapore is at the forefront, say, of all the startups and innovation, but Singapore is a country of, I think it's 5 million people. It's one city. How can they be so at the forefront of everything when the market is so small? And everywhere they have to operate is in Asia, which is so many different countries. They don't even have something like the European Union above them. I heard they have like a sandbox environment for startups, but what other things do help?
Well, I think that's the value proposition of Singapore to provide those type of innovation, money and possibilities to the market. You know, even before the fintech wave, Singapore was quite strong in financial industry. And then there's a lot of capital going in. The government is supporting that. The regulator, the MAS, is supporting it. And sometimes when you want to fund your business, they contribute to 70, 80, until 90%.
Wow.
So there's a lot of money going into new startups, and for sure that's easier when you start a business. And when you compare it to Germany, and we had the discussion last week here, sometimes it's quite difficult to get the money or access to funds when you're in the Series B phase, so from 5 million, 10 million, 15 million. That's one of the reasons.
And what can we do about that? What can we learn from Tel Aviv, from Singapore, from China?
I think there are two answers. First, that we create or enhance in Germany the environment for that. It's capital, it's access to capital, it's talent, it's access to talent. I think there are many points in that, and we see starting discussions on that, but I think on an international comparison, that's not enough. We have to do more on that. But I think is the most important that we try to create really one European market. And when you get a license, you know, when you're regulated as a fintech, then you have a so-called license in one country, and you can use this license to go to other countries, which is called passporting. That's nice. So have your license, you go from Ireland to Germany. And we had a fintech discussion last week with one Irish fintech. However, when the AML regulation is different in Germany than in Ireland, that not helps. That's only one example. So we have to create one market, and then we have a size, and then we can competitive.
You mentioned earlier an interesting point about China, that they first let things run, and when they see success, they regulate it. But then again, that's of course the topic needs to come up, right? We're in payments, we're in fintech. They clamped down blockchain because it was too successful, or because they were afraid of scams? What do you think what happened there?
In China?
Yeah. Or generally in most the countries that are usually at the very forefront of technology. Say South Korea is a very innovative country, I would say, from what I see when I've been there, and even the streetlights started talking to me that I should please step back. Stuff like that. But then it comes to blockchain and they're like, no, we are not going to support that.
I think it's one or two things. The first is control. To keep a control over the stuff, the business, the money, and what's going on in that. And this was relevant for blockchain, a little bit for the ICO stuff and the Bitcoin stuff and other cryptocurrencies, to have the control and not to create a shadow market or a second market which cannot be controlled by the government, by the authorities, etc. As one type of the answers. And as you're just citing all the other countries besides from China, and the second is that there had been some scams in the market. And for sure, when you look on the local market, the authorities have the challenge to prevent B2C market and the others from those types of stuff. You look on the ICO, look on the cryptocurrency exchanges where we have seen a lot of stuff which went wrong. And I think that's not basically the technology we're talking about. It's not the product we're talking about, the ICO. It's not the cryptocurrency which we're talking about, but it's the structure where you can provide those services in the financial market. And the answers of the regulators across the globe have been really different. China, South Korea, the US is for ICO, the SEC really prohibitive. Even Switzerland was changing, Zug, the crypto valley.
Yeah.
So there's a lot of uncertainty and insecurity, and we have to find a framework and maybe a regulatory framework in order to use the best of those technologies.
Do you think those very prohibitive countries, they will roll back a little bit and see like, okay, we're going to look at the technology now, and then we try to come up with a framework, and then we're going to re-allow it? Or do you think that's like, at first, that's a total clampdown of everything?
I don't think so. That's a total clampdown. They will have a look on it. They will create the framework and the regulation and maybe playing a part in that. And then we will see new forms of those products or the usage of the technology.
Okay. Do you see any countries that does that particularly well in like, say, fintech in general, but also blockchain?
Let me, when we talk about blockchain, let me talk about the ICO. So ICO means initial coin offering. That means the emission of so-called tokens in order to collect capital. So we have the IPO and the ICO, and the latter being the new tool in order to get money. On the local side, in Germany, we've seen, for example, the German regulator saying, okay, when you as a person will invest, take care, but we will not prohibit the ICO. And the BaFin is saying we have existing regulation. So when it's a type of a security equity token, so existing regulation, so we don't have to do anything at that moment in time. When we see the SEC, they are really reluctant on our ICO at that moment. And to answer your question, what is a good example? Let's take, for example, the French authorities, which are saying, okay, when we talk about ICO, there are two ways. One, the ICO, which is not regulated, and second, an ICO, which is regulated. So the investor has the choice to say, okay, I go in the risky stuff. So in an ICO, which is not regulated, which will not follow the rule, and then I take the risk and the responsibility, or I accept some type of rules and framework, and then it's less risky. And I think that's a good way not to destroy innovation and to pave the way for a new type of financing model.
Absolutely. So I come across a lot of people in like those Ethereum blockchain meetups like, yeah, I have this amazing business model. We do X and we do it on blockchain. I'm like, you don't need a blockchain for that. Like, it's seriously, there's no use. And then you ask, like, why do you need blockchain? Because it's blockchain. Yeah, but that's not needed for your business model. So what would you say are the most, like, the top 3 use cases for blockchain in the future? Where do you really need to see the technology, and where is it like just, I mean, let's say it's a PR gag sometimes, right?
Yeah, that's right. You know, when you see that you put the name blockchain and an I in ICO and in your corporate name something, then the exchanges go up 10 and 20%. It's ridiculous. And you're right. Often it's, okay, we have to do something in blockchain. In a way, that's okay, because then you say, I want to understand that technology. I want to learn. And then you can do anything. Do a prototype in order to learn and to get acknowledged of the new technology, to understand it. Okay, that's okay. However, to say, let's change a process or a financial product while using blockchain for blockchain purpose itself, that makes no sense. So what we say when we're talking about our blockchain to our clients is to say, okay, where's the problem? Why have you to do something? And the answer could be, okay, less risk is expected, less cost would be nice. Then say, okay, let's look on blockchain. And then we say blockchain has a type of several characteristics, and then let's match it to the task, to the process we're talking about. And then you can come across blockchain or not. And you could even say, okay, it's not blockchain, we don't need it. Let's take a structured database, and that's fine, that's enough. And the market, as everybody's talking about blockchain, we see often the first stuff that everybody wants to have a look on that. So it's a different approach, I want to say.
Yeah.
Learning, it's okay.
Okay.
The use cases, what do you say? We see some stuff ongoing in health industry. We see some in insurance for sure, in banking and automotive. And let me abstract it. I think blockchain could be a good use case where you can link different ecosystems, either without the intermediary, the incumbents, which you have today in the middle, or integrating them. And I give you one really exciting but very difficult use case to link the physical and the financial supply chain. So we have your corporates, buyer and supplier, banks, authorities, local authorities across the globe, and then to use blockchain in order to provide liquidity and payment, in order to provide traceability, where are the goods shipped, are they taxed, etc., and then to link those ecosystems and those value chains. We have the SWIFT system where you have the messages and you have a lot of stuff, but it's a really nice and cute use case, but a really difficult one to achieve, which takes a lot of time.
Doesn't Walmart do something like that? I heard that they are now using blockchain to check where products are exactly coming from. They can track like every mango they ever sell. They can exactly track where it's from to also within seconds instead of days to make sure if they recall something, they can exactly recall which customer or which product needs to get back.
Yeah, right. There are many of those types. It's Walmart, it's Maersk. So some retailers, they want to have the traceability. You have the logistic companies. You have a lot of those which are experimenting on that. However, what I meant is to build a new ecosystem. And, SWIFT had been built in 1974 across years and decades. And when you want to link something on an international level, on a global level, then really it takes time. This is one of the most promising use cases I see, but really difficult to achieve.
And if you have seen a SWIFT message for once, you know there should be something else, something better.
Exactly.
Maybe a bit more flexible and still normalized.
Right.
What do you see is, at the moment, is hype? And what is actually use cases? What is like really good craftsmanship? What is entrepreneurial spirit? And what is just hype? I was like, I read this joke that if you say in a closed room in Silicon Valley, you say the word blockchain, then you will get 10 millions thrown at your head.
Yeah, that's maybe right. We should do that. So there's a lot of hype. And maybe we could talk about the reasons why do we have the hype. That's because the ecosystem changed. We have those types of hub, such as Tech Quartier. We have the media talking about banking, fintech, and innovation. We have the startups talking about. We have the consultants talking about. So everybody talks a lot, very fast in the prints and for sure in the social media. So the impression to do something and to do it quickly, and the fear not to miss something, drives often people to look very closely on new technologies or new business model. And that's in a way that's good because they might miss something. However, there's an over expectation and blockchain, I think it's a good example. There's over expectation and not under delivery, but delivery and development needs time. And maybe in the market, we don't accord the time to the new technology. And that I think that's a mismatch in that. And we will need this time, and then we will see a lot of the use cases. And you're asking for the entrepreneurial stuff. I'd like to say might be too early to answer this. Okay. But what I find very interesting, to give you a right answer, so what I find really interesting is the IOTA model to say, okay, when we talk about linking businesses and talking about Internet of Things to solve one problem, that you have to pay for a service or when you buy a product. And then payment comes into play. And when you have the processing time and for sure the processing cost of payment, then it makes no sense to let a machine pay for a transaction which is worth 10 cents because the transaction costs are higher. That's quite interesting stuff to put the transaction cost of payment machine to machine payment to zero.
Let's talk a bit about payments again. everybody talks about the GAFAs, the Google, the Amazons, the Facebook. Where do you see those coming towards incumbents? Are they dangerous for the German banks or to the banks in general? I've read that I think Google or Amazon already applied for a banking license in Germany. Do you see that as a danger, or do you see that as a positive competitor?
That's an interesting discussion we've since some time on the market, the role of the GAFAs. I think it's not an easy answer. When you look how those GAFA models are built, they provided a service and they had a solution that they offered to their clients in a way where they did make money. And banking is quite difficult because you have the regulation. It's one of the most regulated markets. So to my opinion is that the GAFAs might come there where they can quite easily enrich or enhance their value model, their business model, their value chains, and to provide it. So payment is one thing, because when you buy something in the store in an Amazon, then you need a payment. Today you have the cards, today you have the direct debits. So maybe you could enhance this. You have the clients, the private clients and the shops providing their services. You could go into credit, and we see it already. So coming from their business model and their ecosystem, they will, in my opinion, step into banking, and they already did it, at least partially. How far that would go, I'm not sure if they really want to go into the payment space. They might, and maybe Amazon is one of those GAFA players, is one of those which are the first to do so. At that moment, I don't see them besides payment and other near banking services. However, when you talk about buffers, I'd prefer to add the other ones from China, and we talked about it before, so Alibaba and Tencent, because they are already examples which are that they are providing more services. Let's take Alibaba. They provide on the supply chain finance, on the trade finance, products, a classical product for corporates, multinational corporates already, and using banks in order to serve that. So they have the banking license, even the full banking license, and they do it in their markets already, even in India, which is the second biggest market. So we shouldn't underestimate the GAFA stuff, but I'm not sure how far they will go. To my perspective, the question is, who has the access to the client? Who has the touch points? And I think that's the question. Because when you have the touch points, then you have the access and you have the power over the client relationship. And I think this is the most important stuff to fight for. Because when you lose it, then the GAFAs might have their business and the banks their business, but the banks will be pushed back in the value chain with all the consequences on competition, selection, and margins.
Because how many interactions do you have with Amazon and how many interactions do you have with your bank, right?
Right. Yeah. And for the private clients, the answer is an easy one. For the corporates, it's different, and the banks play today a big role. But when you can go for the SME, the mid-sized companies at least, then you can imagine that more and more that role will be less. But that's not today, and I think that's an opportunity for the bank to understand it and to find an answer and build or to enhance a model around that.
In the retail space, I mentioned it quickly earlier with PSD2, the revised Payment Service Directive. Can you tell a bit about that and how it will influence technology companies and how it might make things easier for them to enter the payment market, and how banks should be aware of that and how they might lose market share? I just today read that in Germany there's 1.5 billion euros missing in revenue from incumbents already to fintechs.
Yeah, right. I think PSD2 is a key regulation, and at least at the beginning underestimated. Because in 2008 we had a SEPA building the European payment platform or regulation platform, if you want. And then PSD2 provided some amendments to that when you look on that. So it was perceived as a payment regulation, the next one. However, PSD2 provides a framework. For example, we had before third-party providers such as Sofortüberweisung, enabling you as a third party to use it and make a payment with Sofort. And now it's regulated, and not only this company, but the other ones too. So it's a regulation to the payment startups. If they want to provide payment services, they are regulated. So the level playing field. And this was one thing what the bank expected and asked for. And I think that's right, because it's a framework we're talking about. However, when you look across the roads, then you see that one very, very important part of this is that the startup has to get access from the bank to the payment account of the client, or the other way around, the bank has to grant the access to the third party, to the startup. Mm-hmm. That's the beginning of PSD2 and access to account. However, why only a fintech or payment tech should apply for a payment license in order to have the access? Every company could do that, and the bigger one could do that, or the GAFA could do that. And then you can do payment, or if you want to say, no, I'm not interested in the payment, I want to get the payment data, the transaction data, that's a little bit lower regulation in PSD2, then you can do so, apply for the PSD2 license, and then you have the data. And I think this is a starting point to say, okay, we're breaking up the banking silos and we build new ecosystems in financial services products.
Do you see a big threat for banks in that, or do you think it's a medium threat, or just a wake-up call?
I think on a time horizon, let's talk about the time horizon.
Yeah.
It's a big threat.
Okay.
I don't think that already in 2018-19 the world will have changed, because the people sometimes are too lazy, as we said before, to change. Yeah. However, it started to change the architecture of how doing banking. So I think that's a very important thing. Well, PSD2, it's only payment, it's only the payment account, so it's one type of payment, and it's one product only. But I do see the direction going into that space, that the regulator wants to enable innovation and provide the opportunity to new services. So it's not only a wake-up call, I think it's a danger for the bank. Mm-hmm. However, it's an opportunity, because the bank can do the same using all the data from other banks, combining all data and building their ecosystem. So when we talk about open API, open banking, that means that's not only your services you're providing as a client and the bank is offering to you, but you can integrate third-party services too.
You can compare between banks and you show, hey, look, I have the better services, I have the better tools, I have the better investment funds, I have the better payment systems.
Yeah.
Get a lot of competition, but also hopefully healthy competition.
Yeah, right. And I think that's a good point. And when you have the access to other systems via open APIs, and then you can link the services, and you can think about new revenue models for the banks. And as you know, everybody's talking about how to make a revenue, the interests are low, etc. And let's combine another regulation where we see it's an optional regulation. It's called instant payment. That means that the payment processes are quite fast. So for the normal payment stuff you do, you don't need that. It's in one day, that's okay for the most people. However, when you link e-commerce or m-commerce business models, and then you can say, okay, when you have the payment due and final within seconds, that's maximum 10 seconds, then you can imagine a lot of new use cases and building this together in your new ecosystem in open banking.
Yeah. What do you see the next industry, the next thing that's going to get disrupted?
Besides banking?
Yeah, anything. Whether you say it's health, it's the cars. I think even Dieter Zetsche from Daimler said, go digital or go home.
It's a nice phrase. I'd like to answer, let's do the first revelation first in the financial industry. But you're right, we see a hell of other industries which are impacted. And health, I'm personally not in that, but what I find interesting is that you can use technology to have the drugs you need for you personally. You're not buying something which is available for everybody, but personally, I think that's a huge market, huge revolution on that. And the car space or the mobility, let's maybe say mobility, I think that's one of the greatest stuff, not only from a personal view and the quote from Thatcher and saying, okay, will I use the car or something else, but it's a combined mobility within the cities. As we all know, we have big cities and the mega cities where mobility is an issue. Again, let's cite Singapore, the right to have its own car only to 30% of the population of Singapore, because there's no place. So mobility will be that much revolutionized, not only from the universal space, but from the governments, from the providers, plus the stuff what Thatcher is saying, okay, what is the value you provide? Is it the car with the wheels, or is it the software and the services?
Absolutely. Thank you. So I want to switch gears a little bit. And as most of our listeners are young professionals, are students, people maybe new to the industry or just interested in finance, I always ask the people on the podcast about some career advice. And you partner at Kpmg, you've worked for Deutsche Bank a very long time, and I'm really excited for your insights on what would you tell somebody that is young, is driven, that wants to get into fintech, in the consulting space. What would you tell them? What skills do they have to develop, or what programs to pursue? What is helpful? What maybe character traits they should flourish?
Well, I think the most important is when they have to decide after school or after studies to do something what they would like to do. And in a way have a passion for it or develop a passion. Because I really think when you like to do something and you're really in it, then you're good. And if not, you're not. So I think it's one of the basic criteria.
Okay.
And when you say you have that discussion done and you say, okay, financing in a way is interesting, the banks or the fintechs or consulting, well, I think have a good education for sure, that's key. Have a lot of practical experiences, and either you have it already in your student programs, in your university programs, or doing internship in several sectors. And when you like finance, do it at a consultant, do it at a fintech, do it in a bank, to have a broad view and a broad perspective. I think at the basis that's a good point. And for sure, in being international, that always helps. If it's China or Singapore, you can decide yourself, but being international, for sure, English, that language we speak in the business, that's quite helpful. And to get insights in those markets and to understand it. Because when you are fintech, you're a founder or working with founders, or when you want to work in a bank or want to change something, you have to have ideas. And for the consultant, the same, you have to be curious. You have to be open to understand, and you have to understand the differences. And I think that's quite good when you're doing that in your studies and when you go abroad, and then you have a lot of insights, and then you put this on your career path.
Okay. What changes during the lifetime, say, of a consultant? Like, what makes a good junior consultant, like how to get into the industry compared to how to get where you are, to become a partner, to become a senior consultant? What tips would you give for people that are a bit more advanced in their career, that just want to go the extra mile? Because, it's not easy probably to become partner or to become very senior, right?
Yeah, right. I think first of all, you have to have the right studies. So it's broad. It's not only economics. So we have a lot of people having math, physics, etc. So have a good basis of studies done and have a good CV. That's a starting point. And from the skills, I think it's really helpful to be analytical, to understand the problems, to see them. And then I think the next step becomes interesting and important. And then to, as we say, to cut the complexity.
Okay.
To understand it and to nail it down. For you, when you do your work as a consultant, and when you get more and more senior, doing the sales stuff and the pitching stuff for the client, for your clients. Because the clients comes to you, says, okay, we need to solve this issue on regulation, on transformation, or we want to cut the cost. How can you help it? Then you have to reduce the task and say, okay, we do it that way, and to make it to understand to all the people. So analytics, understand it, and then to nail it down. And the next thing, for sure, communication skills helps, because you're working in teams. As a consultant, you're working often with other consultants, bigger teams. You're working with your client, and then communication is one of the key stuffs that you can learn over time. And the third one is to have the openness to do new things. Because one thing as a consultant, what you learn when you start is you go not in the office and you do one thing. You will go in today doing one task, and tomorrow could be another task. So having the flexibility, having the capacity to learn quickly, and then to adopt it for your task. I think that's quite important in order to do the first steps as a consultant in the first years. Then when you say, okay, getting more senior in a consultancy, what is important for us as Kpmg is for sure to say, okay, there's a business to help to create a business or to make the business bigger and to put it to the clients. And when you can do this, and that's in delivering the work, it's on doing the sales process, doing the pitches, and then you being part of that consultancy while having more and more success, then you have the opportunities to get more and more senior and do the next steps.
That's some very great advice. Thank you. So how can people stay in touch with you, get in touch with you, read more about you? Do you have some last remarks you want to get out to people?
Well, you can reach me, have a look on my name on LinkedIn or Twitter, the other social media. You find me. You find my contact details, be it the phone number and the emails. Get in touch with me. And we're looking always for really good people doing either an internship at Kpmg or doing some good work on consulting the banks, using Fintech or other technologies. So always keen for attracting the best talents.
Awesome. Thank you very much, Sven. It was a really exciting interview.
Thank you. It was nice.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
Disclaimer. Information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. This podcast is for informational and educational purposes only, and it does not contain an offer to sell or buy any sort of financial products, and should not be treated as advertisement for such. Any copying, distribution, or reproduction of this podcast without the prior permission of the creators of the podcast is strictly prohibited.